Hello friends, last video we had seen what is IFRS, what is a total guidance which is comprised under the nomenclature IFRS. So IFRS, IAS, IFRS and SICs. How we have replicated this guidance under Indian situation. We have followed convergence approach rather than adoption approach and replicated this guidance, changed the accounting standards a bit, deviated from that approximately 4 to 5% in consultation with IASB. We call that set as Ind AS. We have adopted Ind AS, which are converged with IFRS. That is what we had seen in our last video. Today we are going to see how this guidance under Ind AS we have adopted in Indian situation. Which companies are required to comply with the Ind AS. So let's see in next 15 minutes that how we have going to or we have converged with Ind AS. We will make it simple. First we will see the mandatory application, then we will see the voluntary adoption of Ind AS. In mandatory section, there are two sections of companies to whom the Ind AS is applicable. Number one is any company other than banks and insurance companies, any service company, manufacturing company, trading company, etc. Any company in the sense company which is incorporated under Companies Act either 1956 or 2013. So that needs to be a company. So it is not applicable to partnership firms. It is not applicable to LLPs. All right. So it is applicable to companies, excluding service companies like banks and insurance companies, but all other companies are covered within that. And second section of company is NBFCs, non-banking financial services companies. So these companies are not covered in the first section. All right. So these two are different sections, companies and NBFCs. So in this entire conversion or in this approach of Ind AS, banks and insurance companies are excluded as of now. So it will be applicable in future to the insurance companies and banks as well. As of now, it is not applicable. So I'll come on to the first section, that is companies excluding banks, NBFCs and insurance companies. To which categories it is applicable? There are three different categories in this section. It is applicable to the listed company. The first category in this section is a listed company or the company which is in process of listing. So what needs to be listed? Either equity securities or debt securities, either of it. If it is listed or is in the process of listing on any recognized stock exchange, not on SME stock exchange, on a recognized stock exchange. So if companies' equity shares are listed on a SME stock exchange, this is not applicable. Ind AS is not applicable to that company. So only on main board like BSE or NSE. So this is number one. Either in India or outside India. So all listed companies, even if the company is listed outside India, not in India, still Ind AS is applicable to that company. So the first section, there is no other threshold for this listing criteria. So first criteria is listing criteria. What is the process of listing is not explained in the rules. That what is meant by in the process of listing. So there is a judgment. So let's say when entity files its draft red herring prospectus or DRHP, or when it first intimates to the stock exchange that they are going to list their securities, either debt or equity securities, on the stock exchange, that will be the date on which the process of listing starts. So that is a judgment. Second criteria or second category for this section of companies is all unlisted companies. Now all listed companies are already covered. So there are about, let's say, 6,000-7,000 companies which are listed, both NSE and BSE, and few foreign listed companies. You exclude banking and insurance companies, and to all these companies or NBFCs also, to all other companies, Ind AS is mandatory. Second section, the companies which are not listed, then what is the criteria for them? in order to apply Ind AS. So the criteria is based on the net worth. So such net worth criteria is not applicable for the first category of companies, that is listed companies. Irrespective of their net worth, whether positive, negative, irrespective of that, it is applicable to first category of companies. Second category, unlisted companies, it is not applicable to all unlisted companies. That is private limited companies. These companies will apply Ind AS if and only if their net worth is 250 crores or more. 250 crores or more. So they will have to calculate the net worth. Net worth, how to calculate net worth? It has been mentioned in the rules. So they'll have to consider entire total share capital plus all reserves and surpluses excluding three reserves. Number one, revaluation reserve you should not include. Depreciation write back you should not include, and amalgamation reserve you should not include. With this, excluding this, entire reserves and surpluses plus total share capital will be considered for calculating net worth for the second category of company. Number three, irrespective whether they are listed or their net worth is 250 crores or not, the companies, if it is holding parent subsidiary, joint venture or associate of the above companies, that is, if any company is a parent subsidiary, joint venture, associate of a company which is listed, irrespective of their listing criteria or net worth threshold, Ind AS is applicable to them indirectly because of their parent subsidiary, joint venture or associate. So this is indirect application. So this is third category. Category 1 is based on the listing criteria. Category 2 is based on the net worth criteria. And category 3 is based on whether it is parent, subsidiary, joint venture, associate of first two companies, first two categories. If it is yes, then it is applicable to that company as well, whether they are listed or whether they have this net worth of 250 crores or not. Irrespective of that, it is applicable. So these three categories, it is applicable to these companies. So first section is for the companies. Any company which satisfies this kind of a criteria subsequently, so today it's not applicable. Let's say their net worth is less than 250 crores or they are not listed. They are in the process of listing in subsequent year, or they crosses the net worth in subsequent year. It is applicable to them in subsequent year. All these criteria are exactly applicable to NBFCs subsequently. So till 16, 17 and 17, 18, it was applicable to these companies. That is first section. Second section, it was applicable from 18, 19 and 19, 20. Correct? So it is exactly the same. So NBFCs, first it was applicable to the listed NBFCs. Second, it was applicable based on the net worth threshold, and third, it was applicable on the basis of holding parent, holding subsidiary, joint venture and associate of such about two categories. So this is the current situation of rather in India for Ind AS applicability to the companies. It is not applicable to the partnership firms. It is not applicable to LLPs, proprietary firms, etc. It is not applicable to the trust. It is not applicable to the non-profit making companies also. Alright, it is applicable only to companies which are registered under Companies Act 1956 or 2013. So it means it is not applicable to the foreign companies also which have their subsidiaries in India. So in such case, there is they are not required to prepare full-fledged financial statements under Ind AS. That we have to understand. Now, voluntary application. Any company who does not satisfy or fits into any of these criteria can still adopt Ind AS voluntarily. Why somebody will voluntarily adopt this IFRS or Ind AS? Ind AS in this case. Because the company is a subsidiary of a foreign counterpart. Foreign counterpart follows IFRS. We, if follow in India, Ind AS, which is very close to IFRS, they do not have to maintain two separate books of accounts, and this is maybe the trigger to the Indian subsidiary to follow Ind AS voluntarily, irrespective of whether these criteria have been satisfied or not. And that's why voluntary adoption is also allowed, except to banks, insurance companies and NBFCs. Still, this 3 section of companies, it is not, no company can adopt this voluntarily. So banks, insurance companies and NBFCs cannot adopt this voluntarily unless and until it is applicable to them. Alright. Now, so these are the considerations which we need to consider about net worth, what needs to be considered in net worth, and net worth should be calculated on the audited financial statement of the latest financial year. Once Ind AS is followed, Ind AS will always be applicable. So for example, if subsidiary, joint venture and associate, once the parent opts for the Ind AS, I mean once parent complies with any of the threshold mentioned here, their subsidiary, joint venture, associate automatically needs to comply with Ind AS once they follow that. And in the subsequent year, if that subsidiary is no more a subsidiary of this parent, no more associate and joint venture, still for their standalone and separate financial statements, they will continue to follow Ind AS mandatorily, because Ind AS once followed will be followed subsequently. They cannot revert back onto the Indian GAAP. So companies who are also adopting this voluntarily, once they apply Ind AS, they cannot go back to the Indian GAAP. Alright. So this is the situation under Ind AS application. So number of companies, you take, let's say 7,000 listed companies, their subsidiaries, joint venture, associate, unlisted companies having satisfying the threshold of 250 crore net worth, there could be somewhere around 20, 25,000, even 30,000 companies which are complying with Ind AS as of now. This is a ballpark figure, this is an estimate. Nowhere this has been officially out that how many companies are complying with Ind AS. Keep watching this space for more informative videos, and do subscribe to our YouTube channel FinPro Consulting and get the information on new upcoming videos. Thank you so much.